A brand new income style covered call ETF just launched, and I think it might have the potential to perform better than even some of the best covered call style ETFs across the entire market. So if you have an interest in higher quality income generating ETFs, make sure to drop a like, stick around, and let's get right into this one. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now just a second before we get into it, let's first back up a bit and go over exactly what a covered call style ETF even is, just so we're all on the same page. Now, a covered call style ETF employs a strategy where the fund holds a diversified portfolio of assets, typically stocks in this case, while simultaneously selling call options on those same assets. Now, this approach aims to generate income for investors through the premiums collected from the selling of the options. Now, this strategy is obviously appealing for more income-focused, dividend-focused investors like myself and probably like some of you guys, as premiums from selling the call options can supplement the ETF's returns. Additionally, what's great about some of these covered call style ETFs is they can also provide a layer of downside protection during periods of market volatility or stagnation. So now that we're all on the same page and know exactly what a covered call style ETF even is, the new income-focused covered call style ETF that we're talking about is a new ETF from NEO's funds, QQI, or the NEO's NASDAQ 100 High Income ETF. Now, not to be mistaken with SPYI, which is another income-focused ETF that NEO's offers, QQI focuses on the NASDAQ 100. Now, digging right into it, this fund's inception date was 1/30/2024, so this fund has only been around for a matter of days at this point. But the fund strategy is pretty simple and straightforward. It says, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the NASDAQ 100 index and implementing a data-driven call option strategy. So a lot of covered call ETFs have an underlying focus that they sort of track or reference to, or of course invest directly into. QQI is focusing on the NASDAQ 100 and using that index to sell covered calls on, which isn't really groundbreaking or anything that crazy, but just wait, it gets better. So it says number two, actively managed by NEOs. The fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing NDX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. So what I've found great about NEOs overall since I sort of came across NEOs a while back, at least with SPYI and now QQI, they're really trying to take a different angle, a different approach, and trying to make some of these more income-focused, covered call style focused ETFs a little bit more tax efficient, which by utilizing 1256 contracts, this ETF could have a much better tax treatment than some other similar funds out there that have a similar strategy that QQI has. So far it seems pretty straightforward and pretty positive. By utilizing the NASDAQ 100 and implementing a data-driven covered call strategy, also along with that being very tax conscious, and of course trying to get this ETF to be the most tax efficient as possible, so far so good. But lastly, number three, it says the fund utilizes a call option strategy that may include both sold and purchased NDX index options, which may provide the opportunity for upside capture in rising equity markets. So if you're familiar with the way options work and this fund strategy, you're probably looking at this and thinking to yourself, wow, that's an incredible idea. Because basically what NEOS is trying to do is they're trying to sell covered calls and earn a ton of premium for doing so, which then of course will be paid out to investors like you and I. But also, this is very important. During times, the management of this ETF is also going to be purchasing NDX options. Now, it's no secret that NASDAQ 100 can be pretty high beta, so during crazy times, the market NDX could see a massive influx, and generally speaking at least, selling covered calls on the NASDAQ 100 is going to give you a capped upside potential. But because this ETF is specifically looking to also purchase NDX options, that means this ETF could also have some massive upside potential if the market trades a certain way within a certain time frame. Now, I personally like that a lot, and that's one of the main reasons that I haven't been as fond of some of the covered call style, income style ETFs, say over the last year or so, just because they don't really have all that much upside potential in my eyes, even though there are certain ones like JEPQ that has grown a ton in the last year or so. But the fact that QQI is also going to be possibly purchasing NDX index options over time makes me really like this ETF, just because at least in theory, this ETF is going to have upside potential even with the overall covered call strategy. Or honestly, better said, it sort of has the best of both worlds. Now, lastly, the investment objective says the NEO's NASDAQ 100 High Income ETF, the fund, seeks to generate high monthly income in a tax-efficient manner with the potential for equity appreciation. Now, I don't know about you, but that's basically all I want out of my portfolio. I want my portfolio to generate a ton of income. I also want it to be somewhat tax efficient, and I also want it to have equity appreciation, which is exactly the investment objective of this ETF. Now, some more important facts about this ETF. It is tiny at this point right now. Only around 9 million in net assets, so there is a chance you can get in early before a lot of other investors do. Now, also, this ETF does have a 0.68% expense ratio, which expense ratio is one of those things that if you're looking at some of these higher income strategies, I think we've all been sort of conditioned to pay anywhere from 0.35% all the way up to 1% at this point. So this falls somewhere in the middle, which I think is fair, especially with how management heavy this ETF is most likely going to be. Now, this ETF is also going to be distributing dividends monthly, which is great. And of course, underlying exposure is a NASDAQ 100 index, which, let's be real here, across the entire market, that's an index that a lot of people want exposure to. So that, for the most part, is what QQI has to offer. But for those of you that want to dig a little bit deeper into the fund, listen closely and let's take a look. It says a principal investment strategy of the fund. The fund is an actively managed ETF that seeks to achieve its investment objective by investing in a portfolio of stocks that make up the NASDAQ 100 index or the reference index, and call option strategy that consists of writing call options on the NASDAQ 100 NDX call options. The fund seeks to generate high monthly income from the premiums from the NDX call options, as well as dividends received from the fund's equity holdings. The advisor may, under certain circumstances, enter a call spread strategy, where it purchases a long bought calls in addition to written sold call options. The advisor will seek to generate a net credit in the call spread. The net credit is the difference between the premiums received by the fund from the sale of the call options and the cost of buying the long out of the money NDX call options. The goal of the NDX option strategy is to generate high income in a tax efficient manner. The strategy also offers the potential for upside participation when the underlying equity index appreciates. Now, the fund's tax efficient returns by utilizing index options such as NDX call options that qualify under Section 1256 contracts. If such options are held at the end of the year, the fund will receive favorable tax treatment on such investments. Under the IRS code, rules will be deemed as if they were sold at fair market value on the last business day of the tax year. If the Section 1256 contracts produce a small capital gain or loss, such gain or loss on the contracts open at the end of the year or terminated during the year are treated at 60% long-term gains and 40% short-term gains. Now, of course, because this ETF has not been around all that long, there isn't all that much data to go off of as far as how it's performed so far, but on the max time frame, the ETF is up 2.61%, if that means anything at all. And over time, it's going to be interesting to see what type of dividends the QQI News NASDAQ 100 high income ETF is going to pay. But all in all, for the more income focused investors that do want some exposure to the NASDAQ 100, I think this ETF could definitely be an awesome one within the category that it sits in. And just a side note, I recently purchased a few shares of this one, so I'm going to keep an eye on it and see how it trades over time. And of course, correct me if I'm wrong, but this seems like one of the perfect strategies for an income-focused investor like myself that also wants some participation in what this ETF has to offer. But when it comes to the NEOS NASDAQ 100 high-income ETF, now I want to hear from you guys down below. For you personally, is this an ETF that you would buy and add into your portfolio? If so, let us know why, and if not, tell us why. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.